Good morning. Welcome to the Brew. Today is Friday, and that means it's Paulina Likos with us today. And our topics: geopolitical tensions in the Middle East rising high, Friday's non-farm payrolls. What's going on there? And a port strike that was averted, but let's find out what could be in the wings on that one after the opening bell. Oh, here we are, Paulina,
Here we are.
in our very, very dark outfits.
Yes, we're finally matching today.
We're matching. Now, what made you go with the dark outfit today?
I just was kind of seeing what was around my apartment, and I picked the first thing I saw, to be honest.
Okay. All right. Well, I don't have the same story because Molly and Max always tell me wear something dark. I don't know why. It must be my coloring, but whatever. So here I am, all blacked out. Well, good to see you as always. Happy Friday.
Okay.
Love these three topics. Well, they're good topics. I shouldn't say I love geopolitical tension, I guess. But yeah, let's dive into these a little bit. So, which one do you want to hit first? You want to talk about the tension in the Middle East?
Yes, I think that's a good one because it has such an impact on the energy market.
Yes.
So it's a good one to start with.
All right, let's do it. We knew bombs were flying. I think they came over from Iran to Israel, right? They were mostly intercepted, I believe. What's going on?
Yeah, so it's nothing new. These geopolitical tensions have been going around for some time now. However, as tensions are escalating, obviously that's going to cause a lot of more volatility in the stock market, which is on edge because of what's happening in the Middle East, particularly following all the things involving Israel and Iran. This heightened tension is causing a lot of volatility in oil prices and overall energy markets. So initially, the markets kind of shrugged off the potential for a broader conflict in the Middle East. But like you said, Iran's missile strikes on Israel last week, that caused oil prices to surge. And the benchmark for the global oil market, which is Brent crude, that had its significantly, rise for over a year. Oil prices, they jumped up $5 per barrel to $75 per barrel. So it increased
Wow.
$5 to $75.
Yeah.
And yeah, the reason why I think is the most important thing our listeners want to know is because of supply concerns. So essentially, there are fears that a potential Israeli retaliation could put the global oil supply at risk. So traditional economics, supply versus demand. When there's lower supply, higher demand, that pushes oil prices higher. So that's the dynamic at play here.
Right. So we're on Friday. So the Monday after all this happened, the market was down about 400 points. This Brent crude was up a few dollars, which is a lot, I think. So yeah, definitely an issue. Well, you know what? We don't know how this is going to end in the Middle East, right? Because Israel is not going to back down. That is not happening. That is not in their nature. And I'm not necessarily should it be because they're being attacked. So they are going to respond in kind. We don't know what's going to happen here either. So you never know.
Exactly. Yeah. And that uncertainty is what's creating a lot of volatility in the markets because Iran is a major player in the global crude oil market. It accounts for about 4% of the world's oil production last year. So given that they're a major player and Israel, in its potential strikes could focus on those oil fields, it could be a potential challenge for the oil market.
Yeah, makes sense. Okay, we're going to keep an eye on that one. That one's not going away anytime soon. I don't see a negotiation and a peace talk coming in the near future with this whole group here.
Yeah, it's a challenge for sure.
Yes,
and
it
hopefully it doesn't escalate too much for other countries to come in. Yeah.
Right. Okay. Okay, and then we had last week we had Friday's non-farm payrolls was oddly pretty good. Well, I shouldn't say oddly, but in spite of everything that's going on geopolitically, this was sort of good news, I think, assuming that it's not revised down the road.
Yes. So the non-farm payrolls report, which is known as the jobs report, it comes out the first Friday of every month. We got that last Friday, and it revealed a very robust job market for September. So we added 254,000 jobs in the U.S. That figure significantly exceeded what economists were expecting, was about 140,000, I believe.
That's a massive jump.
It's huge, yeah. So unexpectedly strong. The strong jobs report is why is this important? Is what investors should be asking, and it's important because this economic indicator influences the Federal Reserve's future policy decisions. We know that the Fed is comfortable with where inflation is at, so now it's going to be not shifting its focus from the CPI, the Consumer Price Index, which is the measure for inflation, but it's going to have more attention on the jobs report because that's the other indicator that they're trying to manage. So this shows that this resilient, job market could support the Fed's case for a lower rate cut or potentially a pause at its next policy meeting.
Okay.
You remember the last policy meeting, there was a huge 50 basis point cut.
Yep.
So this essentially what this job report says is that we're not going to have another 50 basis point cut. We might have a 25 or a pause next time.
Yeah. But the Fed indicated that they were going to do another 50, right? After last meeting. I thought that's what they said. I could be wrong about that, but now they might be saying because of this data, maybe we can kind of back that off to about 25 basis points, right?
Yeah. The Fed is very data dependent, and the issue is data is backward looking. So that's something that the Fed has to factor in when they make the decision is the evolving economic situation that's happening. So it has to kind of backtrack and as it's forward looking. It's a tough job that the Fed has.
Yeah. Okay. Interesting. What is, and I don't expect you to know this, but where did all the jobs come from? Is this, all these new migrants infiltrating the country? Do we even keep track of that? Since they're not really documented, I guess. So how do we keep track of that? Or is it not even that? Do we even know?
That's a really good question, and I'm peeking as we're talking through the jobs report. It looks like leisure and hospitality accounted for a lot of the job growth. That in that sector, it added 78,000 new positions.
Well, that's a lot. That's almost the whole deal, right?
Yeah. So within that category, you also have food services, restaurants, and so forth. And then that was followed by healthcare and social assistance that added 71,000. The government added 31,000 jobs, construction 25,000. So it was led by leisure and hospitality.
Okay, makes sense. Very cool. All right, moving along. Number 3. So I saw a little bit about this port strike, right? The dock workers.
Yes.
Are they called longshoremen, or is that just a funny term?
That's what they're called. The organization is called International Longshoremen's Association.
What a great name for dock workers. I love it. Longshoremen. But you know what? And I'm one of these people. You take for granted how important that function is because of what they do. And we have a global kind of thing going on here. We import and export lots of things. So we need these folks, right? So what's going on with this dock worker crisis? I think it's been averted for now, right? I know they probably wanted more money and better hours and all that kind of crazy stuff, but which isn't crazy to them. So what happened here?
So this was capturing all the headlines last week because when there's a strike at the port, if you just think about it, the U.S., we are an importer. We don't really make anything in the U.S. We get things from other countries, mainly China. We're a consumer economy. We don't really produce a lot of stuff. So the fact that this port strike was going on was going to threaten the growth of the U.S. economy, basically, if it was going to be a prolonged strike. But early on, it was estimated that the strike wouldn't be long. It would be maybe a week. But thankfully, it only lasted like a day, roughly a day or so. And what happened here was, so on Tuesday of last week, the strike officially started, and that influenced 14 really important ports throughout the U.S., particularly the Gulf Coast and the East Coast ports. And it went from Maine to Texas. So it was a vast, strike, and port operators, they were negotiating with the shoremen. And eventually they were able to offer a 62% wage hike increase, which was much higher than the suggested 50%. So they were able to get a substantial increase in their wages. And thankfully it was short-lived, because if it wasn't, we were going to see higher inflation, and less inventory for retailers at a time when we're about to do our holiday shopping. So it would be a really difficult situation.
Yeah, I wonder. It absolutely would be. I agree with that. And bad timing relative to the time of year, totally makes sense. I wonder if these dock workers, have they not gotten raises over the course of time here? They've just been sort of static for so many years. I mean, 50% hike is really a lot, right? I want one of those. Don't you? I mean,
oh yeah, of course. They. I feel like they have been going back and forth with these negotiations, and I wouldn't be surprised if these negotiations kind of spark some interest again in the future. We saw this with other strikes in the past in different industries. So there's this movement. Particularly, I don't know if you remember with the UAW, the auto workers. Remember, there was this strike over the summer, and how they were demanding higher wages as well, and they were able to get higher wages. So I think it stems from President Joe Biden. He is, he is very vocal about supporting the union. So I think that's giving them a little bit more authority, the unions, to kind of ask for more wages ahead of a presidential election where there might be a Trump presidency next, where they might not be able to do that. So I think that there's a lot of things happening, and it's a very high tense environment, and some parties are taking advantage of that.
Got it. Okay, makes sense. Awesome, very good. Yeah, I'm gonna keep an eye on all this stuff. Obviously, the first topic with the Middle East thing. I mean, I'm on that one, daily. I think on my phone I get like a little notification, boom, Israel strikes back or something. There's so many updates on the tension in the Middle East all the time. It's unreal. So,
yes, yeah.
And we're beyond all this, all these topics. Last week we had another major storm hit our East Coast. Early this week. I forget the name of the hurricane now. Milton.
Yeah, Milton. Helene was the other one that just passed through North Carolina.
Category 4. I mean, we have this time of year is nuts with hurricanes. I don't know if I could live down in that area. I don't like hurricanes. They're scary.
Yeah.
Do you ever get anything up by New York?
No, we haven't really had anything too drastic. There are some areas like in the northern part, like right before you hit New York, where there are some flooding zones. So depending on where you live, it can be an issue, especially if you have like a basement apartment. I don't wish that on anybody, but yeah, it hasn't been too much of a challenge.
Yeah, well, that's good. That's good. All right, stay safe. All right, well, very good. You have a great weekend. We'll see you next Friday. Molly, we miss Molly as always when we miss her, but she had a little conflict today. So I hope you have a great one, and we'll see you next time. Good?
See ya.
Bye, Paulina.
Bye-bye.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.